Hello, investors. Welcome to the channel where I use technical analysis to find possible swing trades. Before starting, I'd like to make it clear I'm not a financial advisor. Everything I discuss here is for informational, educational, and entertainment purposes. The technical indicators I use are not accurate 100% of the time. Fundamentals of a company and macroeconomic factors can drive share price changes differently than what we'd expect based on technical indicators. And my goal is simply to bring these companies to your attention so you can decide for yourself whether or not they're good investments for you. So please plan on investing, do your own due diligence before purchasing shares in any company, or consult with a financial advisor. Well, today, taking a look at a food company, Cal-Maine Foods, Inc., ticker symbol CALM. This is a major egg producer in the United States. It produces eggs under some pretty well-known brands. Eggland's Best, Land O'Lakes, Farmhouse Eggs, 4Grain brand. I'm not familiar with the last one, but I am very familiar with Eggland's Best. I have their eggs, and they're always good quality. And I can't remember a time when I bought a carton of Eggland's Best eggs and I had a broken one in it. So they certainly do something right with the packaging. And here we are taking a look at the annual chart. We'll say I'm doing something a little different today with the technical indicators. These are not all perfect technical indicators as I usually look at. There are other factors I'm considering here. And in this case, it is this big gap here on the annual chart. You see it just dropped down and the share price kept going and bounced back, retested, dropped again, recovered a bit, dropped again, and now we're recovering a bit again as of yesterday. So if this gap fills, as you know, 90% of gaps do fill, and that would be a 13 or 14% or so gain from where we are today. And I'll point out this is not related to earnings or anything else. It is just the market sentiment at the moment. And if we scroll down, you see the RSI. It's not in the oversold zone, but it's pretty low and is rising. The stochastics are both low, again, just above oversold and are rising. The volume, as you might expect from that big drop on the chart, you can see there was a giant spike in selling and the pressure is declining and it's being replaced with some green bars in there. And perhaps best of all for this whole situation is the MACD, which just crossed zero yesterday and is rising. So that's certainly a bullish signal. But if we look over here, there's some interesting things on the fundamentals of the company. One of them being institutional ownership at just under 94% and short interest at almost 18%. And I think that's a pretty reasonable setup for a short squeeze on those two, which I would love to take advantage of. Now you might look over here at financial strength and be perplexed by the zeros. That the company has no debt, no long-term debt. It does still have liabilities, of course, which I imagine are contracts that they need to fulfill, but it has zero debt, and that is an excellent sign for a company. Feel free to dig into the balance sheet further if you're interested in exactly what they have. I will point out that this company's income is very swingy. They can make 60 times their income for 1 year versus the previous year. So keep that in mind when you're deciding to invest here. But moving on, we look at the PE ratio and the price to sales, price to book. These are all good numbers. I mean, a PE ratio less than 3, and it is less than 60% of other companies in the industry. And if we look at the gross margin, you'll see it's average. So a slightly lower PE ratio versus average income. But then most impressively, the operating margin, 32%, puts it at top of class, better than 100% of the peers in the industry. Scrolling down to return on equity, return on invested capital, these are all outstanding numbers. And you can see it beats out 93% of its competitors in the industry with that return on equity of 59%. That's just amazing. Now, the growth rate is, again, best in class, beats out 100% of its peers, which is an excellent sign for this company's future. Dividend, and I mean, I'm not even sure what to say with an 11% dividend. Normally, that's the sort of thing you only see on REITs and highly speculative companies, but we have a mere 24% payout ratio, and with no debt and the capex this company had in the last couple of years, it does seem that they are setting themselves up to be able to sustain this dividend into the future. By the way, in case you can't read it, the dividend is best in class. Again, beats out 100% of other companies in the industry. So overall, it looks like this is a solid company that had a noticeable pullback, and this could be a good buying opportunity. But please let me know what you think of Cal-Maine Foods in the comments below. And if you got something out of this, please hit that like button and subscribe. It really helps out the channel. Feel like these brief overviews of companies that might be good swing trades, please click all the buttons, do all the YouTube things, click like, subscribe, comment, please. Even if it's a negative comment, that helps too. And feel free to tell me what I got wrong. I'm always willing to learn. Or if you'd like me to take a look at a particular company using the indicators I present here, just mention that in the comments and I'll try to get to it as soon as I can. That's all for today. Thanks for watching and good luck with all your investments.